Coin traders, what's going on? Up on the screen right now, we're looking at the weekly chart for the total crypto market cap space. So currently sitting just over 1 trillion right now, 1.061 trillion. So right now, a few things to point out that we are looking at. And obviously, as you can see on the screen, long term, we do have the weekly setting up in this big longer term falling wedge. So specifically right now, we're looking at a very tight level where we are smashing up into the downtrend resistance line of this falling wedge. And in addition, if we actually zoom in a little bit, you can see that we are riding the 50-period EMA right now. So we have had pretty much a run-up and a test of it for 2 weeks now. And so obviously on the downside, you can see all the support that we have been having. So the fact that now we have had a very nice run-up and we have started to see a little bit of momentum slowing down. So this is going to be a very big key level to be looking at. So if we do see this level hold up as resistance and prices do fall and we do maintain prices inside this falling wedge, if we look at an apex for this pattern, that does push us out to the start of 2024. So if that is in fact the year that we could start to see a little bit more of that bullish upside in anticipation of the next bull cycle, that could be a very good date if in fact we do maintain this pattern. So right now, that's why it is kind of so critical, but also we do have so much strength for resistance from the bears up overhead. But if in fact the bulls are able to break above this trend line and actually see higher highs for the overall crypto market cap space, then we could be looking at a potential back test and a very nice run up in that instance for a nice start. And then potentially who knows what happens after that. But that's why the current levels right now are going to be so extremely critical to keep an eye on and whether or not we can see a little bit more of that downside pressure. If we do switch over and take a peek at Bitcoin, you can see that we have been rejecting from the $25,000 level here. So let's go ahead and turn on the auto scale so you can see. And actually, let's flip over into like the 6 hours, something like that. So you can see 25,000, big level, and every single time we have been getting complete rejection. So big resistance point, which does help to solidify the resistance point of the overall crypto market caps. Every time we have seen prices get above, immediate and instantaneous flush. With that, though, we have been seeing higher lows for Bitcoin, especially maintaining these exponential moving averages to the upside. So with that support rising in Bitcoin, we do know that as this resistance zone continues to get hammered and we're setting these higher lows on the way up, we're likely going to experience continuous pressure on this upside resistance to the point where it eventually does flip and break, and then hopefully in that instance flips to support. And if that is the case, we could see an extremely nice break from the overall longer crypto market cap. So let's go ahead and flip back to this chart now and flip back into the weekly. Go ahead and talk about that. So looking at the log scale again, so if we do flip out into linear, you can see it doesn't necessarily fit. It is a little bit more relevant too, so we can draw another type of pattern, but as you can see, it's not as good of a fit as in the log scale. So that's where we are looking at, and we always got to use technical indicators and patterns that fit, and we're going to keep using that until it does invalidate the potential pattern that we're looking at. Support to the downside, though, 750 billion is going to be the support line to the downside. So a lot of support, especially right after the FTX flush until this prior move. So kind of an inverted Bart Simpson pattern there. So for example, if we go ahead and invert this chart, you can see a little bit better that we are looking at a little bit more of that pattern, vertical upside, flat consolidation for a couple months, and then now that retracement. So this is essentially what we're going to be looking at, and this is the pattern that we're very much eyeing. So in the next week or two, we should get a lot of clarity about what's actually going to happen. So the current week still has 5 days and 2 hours left as of time of recording. So a lot of time left on the current weekly candle. So depending on what we see, likely I'm not really anticipating too much for the current week. Probably a little bit more consolidation, like I said, forming a little bit more than set bars. And then the following week is probably where we're going to get a lot of confirmation about the future and what's going to ultimately end up happening. So if we talk about the 50-period exponential moving average right now on this total market cap chart, we're looking at 1.105 trillion. So that's a big point of resistance overhead. Now let's go ahead and flip into the monthly, maintain the same chart, and you can see more or less a big zone up overhead that we're going to actually have to see here. So downside is going to be coming in at about current levels, 1.06 or so. If we do ride that up a little bit, call that about the $1.1 trillion level. And we can actually ride that up a little bit higher until about 1.2, just under that, about 1.18. So very big zone here. So the reason I say that, looking all the way left, big point of support before hitting the price all-time high. Now, a lot of people have been calling the May of 2021 the all-time high based on hype and sentiment, which I do agree, because that is when we did see the peak amount of search interest, hype, euphoria come in, and you can actually see the volumes taper off more or less for all of this. So you can see big point of volume here on this initial move, but after that, we're getting a little bit decreased volume for the overall crypto space after that. So that's kind of why we're talking about that. But anyway, nonetheless, I digress. Big point of support, big point of resistance. And now one thing to point out too is that we did look at the 50-period EMAs being resistive on this monthly, but now the current month we have been finding support on that. And so especially after January closed, basically breaking just barely above the 50-period EMA. So 50-period EMA just came under the $1 trillion mark. And for the close, we had 1.005 trillion. So just barely above that. But right now, if we go ahead and zoom in on this pattern a little bit more, you can see that we are getting stuck up now on these monthly EMAs as well. So plenty of big resistive zones up overhead. And that's another reason why it's going to be so imperative for the bulls to continue that upside once they do break through that 25K line. Otherwise, we are just going to be completely rejecting and dumping. And then likely in that instance, I am going to expect and anticipate that this pattern, this falling wedge pattern, is still going to be holding up, and we're likely going to see a retracement of some of these lower lows a little bit farther of this extended pattern here. Now, if we actually flip over into the day, then you can see again just how close the bulls are trying to get to breaking this downtrend resistance line and also run up overhead into this big resistive zone. But what we had happen previously is basically a lot of rising channel action until ultimately dumping, testing this 50-period exponential moving average on the day, and then seeing another rally to the upside. So I do anticipate that to be a little bit more of what we're going to expect and see, maybe a little bit more of a followed upside before another retest and probably coming back down to around the $1 trillion mark or so. And so ideally what I think would be extremely strong is if that does happen, then we get a little bit more consolidation before finally breaking out of this big falling wedge pattern. That could be a very nice setup and potential play for the bulls. Backtesting against this resistance zone and this trend line, finding it as support, and then being on our way again in that instance. That would again be a very nice play for the bulls and something that I would expect to see and probably be a very nice setup, especially to confirm a little bit more of that longer term growth. But if that doesn't happen, then we would need to run down and actually hold a higher low on top of about 938 billion. Otherwise, that's pretty much going to start confirming that this downtrend resistance line is going to be holding up, because in that instance, we will be forming a new lower low and then likely changing the trend to further continue on in this longer term falling wedge pattern for the overall crypto market cap. So yeah, overall, I do think that what happens in the next coming days here and this current weekly candle is going to tell a lot about the future and pretty much what we're going to be expecting right now. But short term, we still have been extremely overbought. So even on the 2-day, you can see very nice levels above the 70 line for RSI. And so we know that there has to be some cooling down nonetheless. And that's kind of why I would like to see a longer term consolidation against this right now. But otherwise, because this is such an extreme resistance line from the all-time high, this bounced back in March of 2022. And then even now, this is our third retest of this line. So we're going to see whether or not it does prove to be effective. Since it is a trend line so far, we're going to rely it as a very big resistance point until otherwise broken. But yeah, definitely let me know your thoughts down below, whether or not you think the bulls are going to be capable of breaking it here, or whether or not we will see a longer term pullback and a retracement to try to confirm a higher low on the little bit more of the daily time frame for crypto here. So if you have enjoyed the show today, please hit the thumbs up, like, and subscribe button if you haven't done so just yet. Greatly helps out the channel and also lets me know that you are enjoying this type of content. Do drop your questions, comments, issues, predictions down below. Do love hearing back from you and figuring out what everyone else's predictions are. But otherwise, stay safe, take care, and I'll catch you back in the next video.